Technically, it is still a very unique market, but having said that, it still obeys the laws of gravity. What goes up in a straight line must come down at some point, and that did happen ahead of that 20,000 glass ceiling in mid-December.
Ron, as always, it's a pleasure to have you here in our studio. And the big topic today, everyone's talking about it, Bitcoin, cryptocurrencies. I'm sure you get asked all the time. We're going to let everyone know what you think today in this interview.
Thank you. Well, now more than ever, it's become very thematic, as you said. And partly because this has proven to be such an extraordinary mania that we've been experiencing in terms of price appreciation. Mm-hmm. And so I thought maybe the best slide for us to begin our discussion on is comparing what could be a potential bubble, we don't know yet, compared with other historical bubbles. And the facts show us that the Bitcoin price appreciation is a giant compared to what seems to be relatively to Bitcoin baby bubbles. And so in price appreciation, Bitcoin has risen from just under 1 cent by 100 million%. So it's really important to actually choose the correct starting point in order to get these numbers. Mm-hmm. But what that does mean is the tulip mania of several hundred years ago in Holland, when they were selling flowers for the same price as a home, is only 50,000%. And for those who may have heard of the South Sea bubble, which is more of a European, UK-wide bubble, that was only 1,000%. So back then it was certainly a mania of that era, but nothing compared to Bitcoin now. And the question really is, although history looks like it's rhyming in terms of bubbleology, it may or may not repeat in exactly the same way, because this time might be different. And I think one of the key points here as to why it might be different is that the price acceleration in cryptocurrency is very separate from the disruption opportunity of blockchain. Mm-hmm. So one to keep in mind as these markets move.
Okay, so with that in mind, what do you sort of expect to see next from Bitcoin? And that's quite a difficult question, but what can you kind of tell us?
Well, technically, it is still a very unique market, but having said that, it still obeys the laws of gravity. What goes up in a straight line must come down at some point, and that did happen ahead of that 20,000 glass ceiling in mid-December. What's important, so we can just see there on the chart, it failing to break above 20,000, but that also happened about a week or two just after the exchanges, the futures exchanges in the US, announced that they were going to start pricing up Bitcoin, which is positive in the long term, but a lot of the speculative froth in the market, the easy money that was made in Bitcoin, those traders got a little bit concerned because they weren't sure as to what regulation would mean and the exchanges coming into force. That acted as a short-term contrarian signal. We got the market top. I decided to go on the record on the 22nd of December to suggest that the top was in place for now and that we would have extended setbacks, which later on developed into a 50% drawdown from peak to trough. Mm-hmm. I believe that we will likely break 10,000 on the low side, but we have to wait and see. And if we do, the more important technical level is 91, 92, 83, 25, and that's the prior price exhaustion zone, or a gap, technical gap that was made in November. Technical Analysis 101 tells us that price gaps are revisited and closed. And just as a potential worst case scenario, which Bitcoin can do because it's so volatile, an average of 20% volatility per day, Bitcoin can also risk into 7,000 to 6,000 as a worst case scenario. Mm-hmm.
Let's look at risk or reward now. As Bitcoin as a whole, is the risk reward getting? What's the situation right now compared to maybe a few other different cryptocurrencies?
Well, looking at Bitcoin specifically, the risk reward in the latest cycle over the last 2 years has been increasingly poor, partly because most of the move has already happened, and it's happened in a very parabolic way. So that massive acceleration that we saw, 3,314%, is great for the people that made the money. But then, as they continue to make more, they do it at the expense of a greater risk situation. And so that's why I call it the parabolic risk cycle. And if we look at the average of the drawdowns across Bitcoin's history over the last few years, that equates to 85% on average, and a worst case scenario of 93%, which happened in 2011. So it can move, not just on the upside, but also on the downside. And just from a sentiment perspective, it's interesting if you just run a search on Bitcoin bubble, you can see the blue line overlay there showing that's picked out interesting interim tops in the market. Previously, 1, 2, and the very last one just now. One final point is that when Bitcoin did trade above $1,000, that's roughly around the time that people who owned gold decided to liquidate some of their gold assets in exchange for Bitcoin, because it was equivalent to the same value. So those who ask the question, is Bitcoin real money, should keep this in mind in terms of the attitudes and how they change as cryptocurrency gains in value.
So with that in mind and the value of Bitcoin, who were the big winners in 2017?
Well, I mean, it's all about backing the winning horse. And interestingly, in 2017, in the race to the top, Bitcoin actually lost. It didn't win, despite its amazing price gains. Relatively speaking, the real winners were its peers, Ethereum and Ripple. Ethereum was up 10,000% in 16 months. And the true miracle Ripple effect was on Ripple itself, 3,500%, which seems less in nominal terms, but actually it's more, because that was only in 11 weeks. So really, it's important to be looking at this as a race to the top in terms of which cryptocurrency will hold its own, and it's a fast-moving race. The other thing is, from a technology perspective, each of those cryptocurrencies have their quirks. So Bitcoin, I think some people are concerned about it being a little bit more expensive in terms of transaction, speed not being that efficient, and so on, whereas some of the other technologies are improving, and so for that reason, they may gain in price.
I'm going to move on now to look at a fairly interesting point in how can we compare what's happening with cryptocurrencies to what happened with the internet?
Yes, well, I mean, cryptocurrency and the internet, new paradigm of the year 2000, and any other technology paradigm follows a 3-stage process. A lot of people think that it's an overnight process. You get the boom, the bubble, and the bust. But actually, the boom and the bubble and the bust phase is actually stage 1 in a new paradigm situation, which we're in. So if we just use the technology bubble of 1999 or the year 2000, that's a nice price and cycle analog to the here and now. And this is a chart of the NASDAQ just showing stage 1, where we do get the mania. We do get companies that add .com to their name and it skyrockets in price, as was the case with crypto. We get a crash of roughly about 90%, and yet when we think that the market has died and will never be heard of again, it still succeeds through a stage 2 and 3. Now the stage 2 is what I'm calling the transformation or the learning stage, and that's where the regulators get in, that they add more rules, more transparency, smart money starts to follow in the market, so the volume starts to broaden out, volatility starts to reduce. But actually you also get live or die rotation between some of the leaders. So for example, back then, Facebook took the lead over MySpace. Potentially Bitcoin might be the MySpace of then, as being as the early fallen poster child of now. We'll find out, no one really knows. But stage 3 is the one to really look forward to in the coming years ahead. And the key factors that we need to be thinking about as part of that stage 3 paradigm shift is an exponential growth after the adoption of cryptocurrency reaches at least 20%. A lot of studies show that 20% is the magic number for any new paradigm, whether it's crypto, whether it's technology, or even automobiles in the early 1900s. That's where it needs to hit. The other thing is Lightning Network is a new platform that will extremely change the way that cryptocurrency is traded and actually reduce the costs as well. So that when it comes into fruition, I think roughly in about a year or two, that will be a big game changer for the market. And then lastly, big question mark is if we get to see more decentralization within the economy and a potential currency revolution, which would serve for the long-term purpose of cryptocurrency, not just for the financial market space, but for other sectors of the economy as well, which will add more upside for its long-term opportunity.
Okay, and just finally, this bubble, how big is it?
Well, this is it. I mean, it's not just cryptocurrency specific. We have a market fragility at the moment, and this index here is measured by Fed Financial Stress Index, and it just shows that this time seems to be too good to be true in terms of stress levels. We're actually quite alleviated in stress levels, but history shows us that the last time we seemed to be too good to be true is when we had the housing bubble, and before that, the tech bubble. So treat this as a contrarian signal. I've put 3 black swans in there as potential risk scenarios to watch out for. Certainly an increased volatility is very overdue. We've gone for a very long time without not a 10% correction, not a 5% correction, but not even a 3% correction, which is very unusual. So potentially a calm before the storm. Second thing, think about a potential yield shock, so interest rates rising considerably this year. That might be a second point of concern. And third and last, geopolitical risks in North Korea and Middle East continuing in the background. Any one of these 3 things or something else might be the black swan event that turns the market over. It doesn't take much to break the camel's back.
Mm-hmm. Ron, thank you so much for explaining everything to me and us. It's fascinating stuff and lots of stuff to think about there, so thank you very much.
Thank you very much.
And thank you for watching. If you like this interview and would like to find out more, be sure to head over to dugoscopy.tv.